Okay. Good evening, everyone, and welcome to another episode of the Gripping webinar. We are excited to have with us Pushkar Singh, founder and CEO of LetsTransport. Before we get into the session with Pushkar and I ask him to introduce himself, just some house rules. Please feel free to put in your questions either in the chat to the panelists or in the Q&A box below your screens. I will definitely pick them up and post them to Pushkar during this conversation, and we'll make sure that everyone's questions are covered. The format will be to spend the next 15-20 minutes having Pushkar talk about his background, about LetsTransport, and we understand what is the asset that we are leasing from Grip on behalf of the investors to LetsTransport and why that's important for LetsTransport's business. Pushkar, welcome again to the webinar. Absolute pleasure to have you and great to be able to partner with LetsTransport in the first transaction with Grip and being able to offer that to our investors.
Thank you so much, Nikhil. I think it's been a very pleasant experience during the entire transaction, as well as, thank you so much for having me over. I hope this is useful for others. Those who have taken out time of their busy schedule. Looking forward to this session, Nikhil.
Absolutely. Like I mentioned to you, the unique thing about Grip and our users are that we like to participate in the growth of companies in a very different manner, non-equity, non-debt, and provide this platform for people to hear from you about your business. A lot of businesses, especially on the logistics sides, are working in the background to make things happen. Right? I'm sure majority of us have got goods delivered to our houses or something come to the shops near our houses because of LetsTransport. It's just that we don't know it.
Right? Thank you so much, Nikhil. I hope so too.
I'm sure it is. The scale of your operation and the growth is just been phenomenal. And maybe that's the right note to kick off. Would love to hear a little bit about your personal background, what got LetsTransport started and what the business is today.
Absolutely, Nikhil. Would love to do that. I'm a mechanical engineer by trade, graduated from a college called IIT Kharagpur. It's near Calcutta in the year 2013. Went on to work for a company, ITC, which is one of the largest CPG companies in India. I was part of the division which was launching food products for them. So Chocofills, Delicious, Ashirvad, Yippee. These are some of the products that we've worked with. And it was during those 2.5 years of my tenure with them is essentially where I encountered the challenges of last mile logistics that an enterprise in India faces. So this started off as a management training project within ITC's ecosystem. And slowly it kind of culminated into a company which I started in 2015. What we help with larger enterprises is essentially moving products in and around a particular city. So think of the use cases such as moving products from a distributor to a retailer or to an end consumer like you and I. Or also it could be distribution into neighboring cities, which are say about 50 to 100 kilometers to an urban consumption center. So that's what we largely do for enterprises. Today, we are privileged to be trusted by over 150 to 200 large corporates. Think of them as most of Nestle's, Pidilites, Amazons of the world. And it gives us immense pleasure to kind of empower about 1 lakh truckers on our network to find business from them. So that's the shape and form of who we are. It's been about 5-6 years of privileged journey that we've seen. In the process, we had a lot of ups and downs, more downs than ups, I would say, as any founder would go through. But I think it has also kind of chiseled who we are. What we largely offer to our enterprises are a broad value proposition. One is it increases your reliability of deliveries, which means you no longer have delayed deliveries, you no longer have stockouts, fill rates, so on and so forth, which was a problem which I faced in ITC. At the same time, we are one of the most optimized in terms of cost structures. So you'd be surprised when I was in ITC, our last mile delivery cost is twice that of the global average, which means a Nestle in India would do twice that of what's spending in the US. And further, even while we invest so much into distribution structures, yet we do not have products on time in retail outlets. Right? So that was the pain point which I wanted to solve. In a layman's context, often not, let's say if you were to visit a retail outlet, ask for a bag of Ashirvad atta, and the retailer nudges you that, because Ashirvad isn't there, buy a Pillsbury instead. That is a loss of sales because of stockout situation. So that's in a nutshell what we help brands achieve more. So you'd be surprised that about 25% of sales is lost because products do not reach on time. So it forms both a bottom line erosion as well as a top line erosion for these brands. Went deeper into the sector, understood that the problem was at large for most of these enterprises. And that's where we started LetsTransport as a company. Now, just a quick as to why we are different than who our traditional incumbent logistics players were. If you look at the entire listed set of logistics companies, the larger family-owned businesses, you would find a common theme, which essentially they dabble with big trucks, which is essentially trucks which carry north of 30,000 kgs, and these trucks would travel on national highways connecting two cities in general, right? And none of them are actually companies which dabble into last mile logistics, which essentially comprises of smaller trucks, say about 500 kgs to about 2 tons, and traveling a distance of less than 50 kilometers. So there's a lack of organized players present into the space. So this entire industry, when I was in ITC, was dealt with about 50 lakh small individual truck owners of these small trucks that you're seeing. So it made intuitive sense to kind of bring technology to them, empower them, and kind of help enterprises discover better trucks at better prices, and at the same time kind of enable truckers to find more business from an enterprise. So that's in a nutshell who we are. We've built some strong technology stack at the back, which allows us to deliver cost savings north of 25% for enterprises. At the same time, it delivers about 35% higher income for our truck owners. And we promise a 99.7% reliability across all our transactions.
Those are some great stats, and maybe Pushkar, if you allow me to break it down to make it simpler. Um, let's take ITC, because that's your ex-employer.
Right.
The ITC requires to deliver some of their products to the local Kirana store.
That's right.
These guys have your system in the back end that allows them to book a truck completely flexible in terms of the size of the truck they require. I believe you provide everything from a 1-ton truck upwards to a large trailer, right?
That's right.
To full-length truck. And then these trucks are not necessarily owned by LetsTransport, but you have access to 50 lakh truck operators, or large number of truck operators who get these orders. And can provide it. So it's a matching engine to make sure that enterprises get in touch with the trucks that they require to make that delivery happen. Is that a fair summary?
Absolutely right.
In this process, do you enter into a long-term contract with some of the large enterprises, with the truck owners? How does a contractual relationship work?
Absolutely. I think it's a good question, Nikhil, looking at the forum and the audience that we have. So we do get into long-term contracts with large enterprises. The contracts are structured around what the pricing should look like, what kind of capacities would be enabled through our platform, so on and so forth. And just to add to a level of complexity, I mean, while you look at a city from a lens of Bangalore, it is, but when you start breaking it down into micro market, Kormangla is very different from airport area, right? And so that's the kind of network that we offer them. And hence we get into a long-term contract into serviceable markets where we are present. Because it's an enterprise business, once you hit a product market fit with these enterprises, you tend to largely upsell and cross-sell with them. So while we might have gotten into a city with a capacity size, it automatically expands to all the 200 accounts, more cities, and the kind of truck types that we work with. So yes, you have about recurring revenue coming into the system, which means at any given point in time, about 50% of our revenues would always be recurring in our nature.
Yeah, I think that's to me is the real beauty of the business, and to be able to have those long-term relationships, which often then feed very into getting the supply for the trucks, right? If you're able to provide surety of orders to them. And I think one of the case studies on your website that really appealed to us was how the truck driver says that he's able to go home, right? And not have to work for multiple days, be away from his family, but be able to get more regular hours done. Can you talk a little bit about that aspect of it, and how do you onboard those truck drivers? What is the promise to them?
Absolutely. So, Nikhil, I think I would take you back to my journey in ITC, and it comes in from a very simple understanding of what this industry is all about. Now, if you look at consumer goods, right, you and I shop for groceries typically on a Saturday and Sunday. And that's when an ITC or an ST would reach large number of trucks, which otherwise would taper out during the remaining part of the week. But an e-commerce or a construction company, or let's say a paint hardware company, would need more number of trucks over the weekdays rather than the weekend. So if you kind of intuitively start superimposing these curves, you're bound to generate more efficiencies in this industry, right? Now, this was a very simple, not a rocket science, very simple logical conclusion to a very first principles approach. With this insight, I actually approached my driver owners during my tenure at ITC. And I did say that, I'll help you find an Amazon, I'll help you find an Asian Paints. It becomes a win-win for all of us. And that's when all of them categorically denied. And that led to a very interesting conversation with me and them. And I also realized how different it is to think like a manager and a business owner owning a single truck, right? So the question to me was, and I hope you appreciate the value that we bring for them, was essentially, if you look at it, if intuitively their question was, what do you think I do for an ITC? And I was like, one of my warehouse operators would probably give you a call and then you would go and deliver it for them. They said no. I figure out a procurement manager for an ITC first. I submit my bid, RFQ, so on and so forth. Then they move me towards a sales and operations guy who would tell me what my products are, where should I deliver, what's the route, so on and so forth. Then I start delivering products for you. After the entire month completes, I essentially start raising my invoice. And by design, I'm an illiterate. I raised my invoice, I submitted to your finance team who would probably put a debit note to me, and I then chase them for the next 70 days to collect my money. So I'm practically married to a company like ITC because of the hoops and loops that enterprises in India have set up. And if you think I can do it for 5 companies, of 30 available working days, 15 days, probably I would be spending it in your offices. And while it was a very simple insight, what it led me to understand and create a persona of who my users were, what we said, the entire onboarding of an enterprise, be it contracting, be it rates, be it invoicing, be it collections, everything would be taken care by my platform. Our software would generate invoices automatically for them. It'll close contracts for you. All you have to do is start Clip and Socket. So you essentially are eliminating redundant activities, which these guys were doing day in and day out. And then you essentially start allowing them to work more. That's essentially who my driver persona is and what I value I do. Now, because he has more number of days available, he starts working more. Not just that, he starts having a relationship with multiple accounts.
Understood. Very fascinating. It's, so many benefits, but more importantly, you're actually increasing the capacity in the system because it's going to more productivity than unproductive time spent. Yeah. Okay. I'm going to take the next question. There are two questions from Captain Mukul and Nixon, which are sort of related, and I'll try to pick on them from a business perspective. There are lots of other names that we hear about in this space, like doing logistics, particularly for enterprises, third mile. Nixon talks about Link and Porter. Can you help us draw some distinction between those business models and yours? It doesn't have to be specific to any particular company, but just generally.
Absolutely. I think it's a good question, Mukul. And, going back 2015, I think there were 106 startups trying to build an Uber for trucks in India. That was the flavor of the month, I think, back in the year. I would agree with you that a lot of companies did come into the space. I think the companies mentioned by you, and, these are fairly well competitors to us. There are subtle differences between the organizations. For instance, we are enterprise focused, which means a Nestle would work with us, while a porter is more SME or a B2C focus. So if you had to shift your houses, you would probably book a porter and order it. Let's transport right now. So you have a completely disjoint set of clients that you're working with. And because you're working with SMEs and B2C, your requirement of truck sizes are very different than what I require. So they would probably be working with a 3-wheeler or 1 ton at the max. Because I work with enterprises, I go up all the way up to about 10,000 kgs as well. Now, that's the subtle difference, which means from a client perspective, we are completely disjoint, creating different set of values to both our ecosystems. And on supply side, about 20% of my supply would overlap with the companies that they've mentioned.
Understood. Okay. I hope that covers your question. And Nixon, and if there is, please let us know there's a follow-up. There's another layer of this question, Pushkar, which is on the electric vehicle companies. And I want to separate that question out.
Sure.
There are lots of electric vehicle or lots of fleets using electric vehicles now, right? A lot of the logistics companies are moving to electric vehicles, and hence, but they're not necessarily electric vehicle companies, right? The premise is logistics. It is just the form factor changing from a diesel vehicle to an electric vehicle.
Absolutely.
And we spoke about this half an hour back. So I'm going to, and this is probably the most important question. As a company with significant size, having operated or having a network of diesel vehicles, why is this transition important to you, and why are you looking to do it now?
Absolutely, Nikhil. I think, Nikhil, two things which we talk from a macro perspective. One, I think, there is a good impetus on electrification of fleet, not just in trucks, but also in passenger cars. I personally think that small commercial vehicles would be the ones to fastest adopt the technology, largely because everything around that is enabling them, right? For instance, your range anxiety is sorted because you're not essentially traveling 500 kilometers, right? You're still covering about 150 kilometers a day. Your savings are fairly strong, right? Your operating costs actually drastically lower. Now, if you remember, the reason why I started this company was to essentially lower the cost of logistics down. And the way we look at it, we look at P&L of each and every partner of ours, and we start trimming down their costs, right? Which means, can we actually make them more efficient operationally? Can we make them more efficient financially? Can we give them access to capital, which otherwise was not available to them, thereby leading to a savings in costs, right? Now, with that in play, I essentially believe, and as a team, what we're doing is now we are enabling driver owners to actually buy these trucks and create an ecosystem or a flywheel where each and individual truck driver trusts the technology of electric trucks, and then that's how we kind of kickstart the flywheel. Now, while I would say a lot of people are talking about electric trucks, I think what we really are hoping to look at is a robust product. What it essentially means is, if you look at historically the way this industry is developed, of those 50 lakh trucks which are out there, 95% of them are owned by driver themselves. So you do not have large fleet operator. You do not have companies like Nikhil owning a TCI or Pushkar owning a Gati and then placing order for 3,000 trucks. But you have each an individual truck driver actually buying these trucks. Now, the reason why it's the effort that Grip is actually partnering us with is very important in this equation is, while I as Let's Transport would be able to probably buy 1,000, 10,000 trucks, but if we were to kind of bring 50% guys on electric trucks, these users need to be convinced that this is the right product for them. Now, what it does is that you are essentially enabling them to find financing, you're enabling them to find demand, you're enabling them to kind of set up the entire infrastructure. And given that you do not have a lot of large OEMs in this space, Tatas and Mahindras, unfortunately, have not kind of innovated at that space. Unfortunately, what it rests with, it leaves the driver with an anxiety of whether will I have a resale value of this truck or not. They do not understand scientific terminologies that will like you and I would. Which is where what we're trying to do is we're trying to kind of handhold these truck drivers to actually trust this technology and start buying these electric vehicles out, because what we believe is it would expand their savings by another 20%. So that's the whole concept of why this becomes an interesting partnership, Nikhil.
Yeah, maybe I can just add from our perspective at doing at Grip, just to give everyone a context. Grip has enabled the purchase and lease of more than 2,000 electric vehicles over the last 1 year, and we have worked with maybe 10 different companies to use these electric vehicles for different use cases, predominantly logistics. What we have seen is very similar to what Pushkar talks about, where while traditionally vehicles were owned by a large number of people, and what each operator used to own one vehicle, right? Whether it was two-wheelers, three-wheelers, even trucks. In the case of electric vehicles, that is very difficult to have a transition in the beginning, because the adoption of the vehicle, the trust in the technology is going to be limited. I think the second thing we're seeing change is in the last 5 years, a lot of logistics has got organized, right? Thanks to companies like Let's Transport, who are facilitating the interaction between enterprises and hence are funneling the revenue or the orders between large enterprises and the small operator. The combination of being able to facilitate a transition from diesel, where there's a risk of technology, to another vehicle, at the same time being able to support the payments, because the end customer remains Let's Transport, I think is a powerful tool for this transition to happen, right?
That's right.
And if companies like Let's Transport don't facilitate that change, the adoption of electric vehicles is probably going to get pushed out significantly, because the individual operator is not going to buy the truck. At the same time, as Pushkar said, the premise of electric vehicles, especially in logistics, is that it is cheaper to use. Okay, and that means there is more saving for the person who's operating it, for the company who is providing who's taking the service, and hence it's a win-win for the industry. Ultimately, it's a win also for the economy and the environment. So I think that's the transition we are seeing. So Captain Mukul, we have a lot of logistics companies. Pushkar's talked about the differentiation. A lot of them are moving to electric vehicle, and our bet, and Pushkar can confirm, is that majority of them will move to electric over the coming few years rather than stay diesel. Those are the ones that will be more competitive in the future. Okay? The challenge is the manufacturing, and that I think is something to be solved. Sorry, Pushkar, you were saying something.
I'm saying that that's very true, Nikhil. I think that's the right hypothesis that even we are working with, and just kind of differentiate, going a little more deeper into what Mr. Mukul did ask us about. One way we are different is because we have recurring revenues. Your asset essentially is backed by a cash flow which comes in from a large enterprise, which is essentially a blue chip, an invoice of a blue chip, right? So unlike an SME or a B2C industry, you have very high visibility of the revenue which is trickling in, and because our technology stack allows us to ensure that the services rendered are actually up to the mark, wherein the pilferage / any kind of shortages is very minuscule.
Absolutely. Pushkar, one favorite question: how do you think about the lockdown? And there are lots of talks about a third lockdown, the potential of a third lockdown. I can only imagine that things have, and it's reflecting in your financials, businesses actually remain consistent across the two lockdowns, but would love to get your perspective on maybe some nuance or challenge that may have been faced.
Absolutely, Nikhil. I think I would probably divide it in two formats: the first lockdown and the second lockdown, because both of them had different learnings to us as an industry as well as a company. I think in the first one, we were understanding what lockdown is, because even the government regulations and the regulatory authorities were kind of going down harsh on should a truck be allowed, should a biker be allowed, should a consumer be allowed, so on and so forth. So first few days of the lockdown was, I would say people were, it had come to a standstill. But as people started understanding what a lockdown was, within the next 4 to 5 days, we started working with authorities to get essential passes for our truck drivers, and started doing home deliveries for most of these traditional brands as well as the new age companies. You'd be surprised that for a lot of these large retailers, for a fairly large segment of offline or the traditional brick and mortar companies, we actually empowered their home delivery channels. So what it did was, it allowed us to kind of also create a new revenue line for them. And hence, across any industry which was working with either the essential category, or think of it as consumables, which people were using in their daily lives, we saw a fairly strong growth in the revenue. Where we did see challenges were essentially industries such as hardware industries, which either were either of discretionary spend or something which people were just kind of holding it back. I think those are industries which were definitely, I would say, kind of taking a toll. Because I would say, we are fairly well. Our portfolio of clients and industries is quite a healthy mix. We remained consistent. Rather, we saw growth. God was kind, and we saw growth across both these lockdowns. I think in the second lockdown, people were a lot more prepared, right? And I think that's why there wasn't even a glitch. Coming to your third lockdown, I think e-commerce is here to stay. What it has also helped us as a company is because our primary users are individual truck owners, and their digital adoption earlier was fairly minuscule, right? Today, when you see people organically download app, they discover this, and then they kind of start working right away. So it helps us bring our cap of truck users down.
Yeah, and there's tremendous evidence that while, as you mentioned, the adoption has happened at the driver's end, a lot of companies who are till now resisting using warehousing, distributed
Absolutely.
warehousing, distributed logistics, are sort of moving in that direction. And probably you're seeing demand, spike from both directions. We should definitely be prepared better for a third lockdown, especially when it comes to e-commerce.
Absolutely.
Yeah, perfect. I'm going to now move to the last section of this conversation, which is more specific to our transaction, right? And there's a question from Vishal, which we'll take as well. But just to summarize for the users here, GRIP is facilitating the leasing of electric three-wheelers to LetsTransport, which will be used as part of the logistic operations that Pushkar spoke about earlier in this call. Investors will receive, as in all GRIP transactions, a monthly return for being able to provide this, which allows them in total to get a certain IRR on this transaction. The specific numbers are available on GRIP's website. Vishal and Pushkar, if you're okay, I'll take this question and then give you a slightly variation one to answer. It's not structured as a debt, while you're absolutely right that this is a fixed payout, but we are facilitating a lease transaction and not a loan. The financial nature of both aspects is different. The way it is recorded in the balance sheet of the lessee, the way it is recorded in Pushkar's balance sheet is at LetsTransport, the way the tax treatment is done. What I would like to say is that yes, there is a credit risk, right? Because it's a fixed payment, there is a credit risk for any kind of lease transaction, which is similar to that of a loan transaction. The one big difference from a credit risk perspective is the ability to take back the asset and to monetize it. In the case a loan defaults, you along with other debtors or creditors have to go and claim whatever is the liquidation value of the company. But in the case of a lease, our very specific asset is this electric three-wheeler or whatever transaction we're leasing out. And in case a default happens, it is the ability to take back this asset, release it or monetize it that gives a different flavor. This also is the collateral, as you ask in your question, along with which there is also a security deposit or a cash security deposit that each of the companies gives to the investors on behalf of this transaction. Yeah. Pushkar, a related question: Why lease from GRIP when, as a company of your size and scale, having raised significant amount of capital from some of the largest, venture capital as well as venture debt firms? Why does this make sense for your business?
I think it's a very good point that you brought out, Nikhil. while a lot of people, kind of, I would say, overlap debt and leasing. I think both of these are fairly different instruments, right? The proceeds of debt can go to multiple formats. Like as you rightly mentioned, we have venture debt, which essentially looks at long-term requirements of our capital that we essentially need for various other proceeds. Now, if you look at our business, I think our bread and butter, our raw material is essentially a truck, and we wanted to structure an instrument which allows sooner or later not just to have 100 trucks, but could actually expand to 10,000 trucks. Now, the way we look at this business is we are a fairly capital efficient business, and for our EBITDA losses, the investments that we are essentially doing for our technology, um, venture capitals are happy to kind of underwrite it and sign it for us, and we do have that kind of cushion with us. But when you look at a scalable solution to what we are trying to build right now, our vision is to create 10,000 such individual trucks, which probably we would not be as wise if we were to think of raising it from a venture capital, from a venture debt, or a Kotak Mahindra bank, right, which is essentially a banking partner as well. Because at the end of the day, they are looking at as a balance sheet of us as a company, not the kind of operations that's essentially needed to run the show, right? I think that's one reason why we kind of zeroed in and wanted to work with you guys, and I think that's where I see this partnership going.
Yeah, I know you see this, and I just want to add that a lot of companies are changing their business models, right? We're no longer operating the way companies were 20, 30 years back. The scale at which Let's Transport and companies like yours will be in the next 2 years, and the rate of growth has to be supported by different forms of capital, not just lease financing, but inventory financing and invoice discounting and all that stuff. And I think it's fascinating that opportunity is now being created, which should be an enabler for your business. We're obviously very excited to be working with Let's Transport and create this for our users. Final question for you, Pushkar, is what's next? When you and I speak like this 1 year later down the line, what does Let's Trans? Is there something new on the cards? What should we be expecting from you?
Absolutely, absolutely. So, Nikhil, I think we've been very passionate of solving driver owners' problems, and in the process, in the journey of actually helping them solve more, we've stumbled upon a few use cases which help or which unlock a lot of value for these individual driver owners. Right? Think of them as access to capital, which allows them to take a personal loan. Access to capital allows them to buy new trucks. So, my each and every individual driver now owns 3 or 4, 5 trucks, right? Cross-selling insurances, health plans. We're talking about after-sales service network. So the entire universe of what a truck driver needs after or right from the purchase of a truck, finding demand, finding business, finding after-sales network, finding support in terms of financial. I think that's what we envision. And if you've been able to solve that for, let's say, our lakh users that we have today, I think that's something that we would want to set the table and discuss with you. So not just a single leasing product, but we have multiple things that's working well for these guys, I would say.
Yeah, it has to be a win-win for everyone.
Absolutely, absolutely.
And we'll be very excited. Hopefully, we will be in a better position, more capable. Our users will continue to support what.
I'm sure. I think it was a very pleasant experience, Nikhil. I'm sure you'll be more than capable.
Thank you so much, Pushkar. I'll take one final question that just come up on the chat. The assets that are being leased. So just a question. Rephrase the question. The question is the investor having a utilization risk on the assets being leased? The way we look at every transaction, and Pushkar can confirm this for Let's Transport, is that the utilization is being done by Let's Transport, right?
That's right.
The investors are providing the assets on a fixed rental basis, irrespective of the utilization of the asset. The risk or the decision to take for an investor is, can Let's Transport as a company continue to utilize the assets in a profitable manner for themselves over the next 3 years, which is the lease term? Whether the asset is utilized 80%, 70%, 60% does not impact the returns of the investor.
Absolutely.
And hence, yeah.
Absolutely. I think that's the magic sauce that we've created over the last 5 years. So give us an asset and rest assured we'll churn it out. I mean, it's the most utilized asset that you can think of.
Absolutely, and that's why it makes sense for our users. Pushkar, thank you so much for doing this. It was a pleasure.
Thank you so much for inviting me over.
Growing the relationship with you and our users. Thank you.
Absolutely. Thank you, Nikhil. Thank you, everyone. Stay safe.
Thank
Bye-bye.
you for joining us on a Saturday evening. Bye. Thank you.
Thank you. Bye-bye.